what are the points okay, that you may use for the comparison of the sole trader or this business form? Number one, try to compare, right, the liability of the business form. Okay, liability as in limited or unlimited lah, right? Okay, so limited or unlimited liability. Now, number two, you can compare with their legal identity lah, right? So legal identity as in they have a separate, okay, or no separate legal identity. Okay, and then number three, finance, right? So definitely when you're comparing the business form, right, you are comparing with their finance, availability of finance. So limited or unlimited finance. Okay, and other than that, you may also compare with the just now the one is the continuity, same as the legal identity. Okay, you can compare with the finance, yeah, legal formalities. Okay, so is it easy to set up, right? So many or less legal formalities, right? For sole trader and for your partnership, definitely they are facing less legal formalities. So that's why it's easier to sell compared to limited company, right? Limited company, they are actually having a lot of the legal formalities or many regulation from the government. Okay. Yes, unincorporated or incorporated. Actually, unincorporated or incorporated, you can refer to your liability as limited or unlimited liability, right? And number five, right, you may also compare with the secrecy, right? So do they need to publish information, okay, to the public? Yes or no? So usually for partnership and sole trader, they do not have to publish the information to anyone. So you can keep your information, okay, while for limited company, they have to disclose their information. So means what? The competitors can access to your information or your financial statements, all right? So means less secrecy for the limited companies. So these are all the factors that you may use to compare the different form of business. All right, so different form of business you can compare with all these factors. Okay, so all these factors so actually you already have 5 points over here, 5 knowledges. Then you just have 5 analysis. Definitely you score more than the required marks. All right. Now, so if no questions, right, you may screenshot this. Okay. Okay, all of you. Now, so if no questions, then we'll continue with just now the questions. Okay, here. Okay. Okay, this one delete. Okay, come back to here. So 1A, right? So this one we done already. Okay. Now then we go to 1B. Okay, for 1B. Now, so 1B, now this is when consider the 2 orders for ST products in Appendix 2. Now, Appendix 2 also have to refer here. Okay, so Appendix 2. So these 2 products, right? Order A, order B. Now, actually, okay, right? Can, sure, no problem. Okay, so actually, when looking at the Appendix 2, so here we have 2 orders, order A, order B. Now, when we look at the orders, they give you what? They give you the quantity order, they give you the price, they give you the variable cost per unit, additional expenses, and also the number of times the customer has ordered t-shirt in the previous year, right? So what you can use, okay, from this information, right? Definitely, you may use the information to calculate several things. Whenever the questions give you with the price, cost, what you can do, you can calculate the profitability, right? So can based on the Appendix 2, you can calculate your profitability. Right now, how to calculate your profitability? Okay, so very simple. First, right, in the calculation of the profitability, you have several things. Okay, number one, you may calculate the gross profit. Okay, gross profit is the first one, right? Gross profit. And number 2, you may have your net profit. Okay, net profit. So for the gross profit and net profit, right? So for the gross profit, okay, how do you calculate gross profit? So use your revenue, right? You minus your cost of sales, right? Cost of sales. So what is revenue? So revenue is basically based on your price and your quantity. So these 2 will be your revenue. Okay, so to calculate your revenue, use your price multiplied by your quantity sold, right? So here your price is 20, okay, for order A, right? So order A is 20, and then for the quantity order is 5,000. So when you total up, you multiply 5,000 with 20, your revenue will be 100,000, right? 100,000 as a revenue. Now order B is 50,000, right? Now, so here after your revenue, then you need to find the cost of sales. Now, what is the formula of cost of sales? So basically, cost of sales is the total cost that to produce the quantity. What is your total cost to produce quantity? Actually, it's based on here, per unit to produce, you have to pay for $10 to produce 1 unit. So here you have total 5,000 units. So what is your total variable cost as your total cost of sales, COS? Okay, we write as a COS. So cost of sales, use your quantity order, right? Then you multiply by your variable cost per unit. So 5,000 with 10 is 50,000 for your total cost of sales. And for order B, so 1,000 and 20 is 20,000. From here, you have the information already with your revenue and your cost of sales. Now you need to compare order A and order B, right? So, okay, so I will do it here. Okay, let me see. Okay. Now, so here for the gross profit, right? So for gross profit, okay. Okay. Okay, for gross profit, okay, so we have order A and then order B. Okay, so order A gross profit is how much? So just now, based on your information, your gross profit is for 100,000. Okay, then you minus your 50,000, right? So you get 50,000 left. And then order B is 50,000. You minus 20,000. You get 30,000, right? So now from gross profit, then next, what is your calculation? Will be net profit. So what is the formula for net profit? Use your gross profit. Okay, gross profit, you minus your expenses. This all formula must know. Gross profit is only when you use your revenue, you minus your cost of sales. You haven't deducted all the expenses. When you come to net profit, you need to deduct all the expenses. So this is the difference. So the difference between gross and net is gross is only use the revenue. Okay, you use your revenue, you minus the cost of sales. But net profit is use the revenue to minus all expenses. So all expenses are including your cost of sales. This is net. Net profit is your final profit earned after all the deduction of expenses. So gross is only focused on your trading, sales revenue, and your cost of sales trading. But net is focused on all the operation, all aspect of your business. So that's why net profit also need to minus the tax. But usually in your IGCSE syllabus, we do not need to use to minus the tax. Okay, it's not in your calculation for the tax deduction. You just need to use your net profit equals to gross minus expenses. Now from here, we already know our gross profit. Okay, so order A. So order A, gross is 5,000. 50,000. Expenses, so refer to your appendix 2. So your expenses is here. So over here, just now the one expenses is 25,000. Right. So 25,000. Okay. So you minus your 25,000. So now what is your net profit is 25,000. All right. Then for order B, so it's 30,000 as your gross profit. Then you minus your additional expenses 10,000. So you get 20,000. Now this one, right, is actually enough for you to get to level 2 answer already. Level 2 answer means you have a detailed knowledge, okay, and also analysis based on the appendix given. Now actually from here we also have another calculation that based on your gross and net profit, which is the profitability ratio. So here we have profitability ratio that you can calculate based on this appendix. Now, so retained profit, yes, net profit minus tax minus dividend, yes, correct. Okay, right, yes, correct. Now, so come back to here, profitability ratio, we have two, gross profit margin and then net profit margin. What is the formula for gross profit margin? So gross profit margin, use your gross profit. You minus, not minus, you divide by your revenue. Revenue, then you times 100 because margin is measured in percentage, right? Measured in percentage. So from here, okay, look at your order A. Now order A, your gross profit is 50,000. And what is your revenue? Revenue is 100,000. Okay, 100,000. Then you times 100. So what is your gross profit margin for order A? Is gross profit margin is 50%, right? And order B, So order B, your gross profit is 30,000. Okay, 30,000. And then your revenue is 50,000. New times 100. So your gross profit margin for order B will be 60%, right? 60%. So this is where you can use another calculation, right? To write it as your knowledge, okay, where you can use the profit margin, right? Gross profit margin and the net profit margin also, right? So there's another profit margin, which is net profit margin, or sometimes also known as profit margin. So profit margin or net profit margin, use your net profit over your revenue. So actually the formula quite similar to your gross profit margin, but the profit is different. One is using gross, another is use your net profit. Okay. So order A, right? So your net profit margin, net profit is 25,000 over your 100,000 revenue times 100. So you'll be getting 25%, right? And then here for the net profit margin for order B, which is 20,000, okay, over your 50,000 revenue, and then times 100. So it's 40%. So actually, by calculating all this profitability ratio and also profitability, you can get up to 8 marks already, right, for your both orders A and order B. Okay, so this is why actually when the appendix give you all the calculation, it's very easy to do on it. Just calculate, you can get up to level 2, and then level 2 can give you up to 8 marks, right? With one option, I mean, is if with one factor given, right? Now, so here we have all the calculation indeed. Now, so how do you write it? Okay, so very simple. Now, so based on your calculation, you just write what happened on it. Okay, so let's